by buying low and selling high, and you had an enormous position to put on and take off, wouldn't it make sense to place smaller orders at the initial turning point? And then once you have verified that price has support, that you could put on a larger position? So, why is low volume important? Or low activity important? Once we see that the market has made a spike in activity and that the market has turned, what we want to see is that price will continue to probe the area that it reversed in, but we want to make sure that volume is either descending, as you see here, or is staying even at a low level. Now remember, this is a relative low. Well, what are we comparing it to? Very simply, we're comparing it to the level at the turn. Now you can see here that this line is angled and that this turn didn't come exactly on the highest volume. We can see, however, that high volume came into this area here. So we simply compare it to the area on the chart where we see the high volume. In this case, this area here. Now as the market continues to drop back into this area, which would be from this price here down to this price here, we can see that volume is consistently dropping. Now, let's go back to the spreadsheet. Let's just think about this logically for a moment. If price moves down and then recovers, wouldn't it make sense that if more orders to sell were coming into the market here, that as price got to that level, those orders would be filled? Of course it does. That's just how basic markets work. So if more orders are coming in to sell, doesn't it make sense then that price would have to go down? Now in basic economics, we throw about terms called supply and demand. Well, what is supply and what is demand? Well, supply is selling. Demand is buying. What happens if supply goes up? What happens if there are more things to sell in any freely traded market? Price has to come down. But when was the last time you really thought about the markets working in that fashion? I would say probably never. But it just makes sense, doesn't it? That if we see the market moving up, that more people are buying, and if we see the market moving down, that more people are selling. So what does that mean when we talk about price? Simply put, what that means is, if price moves up as it did here on the Canadian dollar, that there was more demand than there was supply. Now, of course, we're not talking about the supply in the general sense of there are 60 trillion Canadian dollars in the market. We're talking about the supply at very specific price levels. And at these very specific and very short-term price levels, there was more demand in the market than there was supply. As price got to this level, more supply came into the market than there was demand, and price came down. As price fell back into these areas, more demand came into the market,